Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the U.S. financial markets. It is 7:14 a.m. Central Time, and I am recording this in preparation for the market day of January the 14th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing and trading decisions that you make. So, a little bit of weakness in the overnight, and as we'll see here, down about 1/3% across all four of the broad market indices. Really pretty quiet an evening, even in the commodities, after so many nights in which the commodities have been so hot of recent, especially with crude oil. Crude oil was up 0.33%, gold was down 0.45%, so nothing really to get too excited about in terms of U.S. futures overnight action. Overseas, relatively quiet in most markets. Japan, the Nikkei was down 1.71%, so that's a little hotter. And as well, the FTSE in United Kingdom was down 1.66%, so a little bit more heat there. In terms of our macroeconomic reports, we do have a pretty big slate of action today. For one thing, if you are a euro trader, we have this European Court of Justice ruling coming out, and that will absolutely have an impact on the euro, which of course will inflect on the dollar and could very well drive our own markets as well. So this one, while we don't have an exact time on this, you need to keep in mind that this could come through the markets at some time today, so try to keep your eye on the financial news. Core retail sales, also you have crude oil inventories, and if you're a bond trader, it's listed as a yellow flag here, but if you're a bond trader, this can be a big deal. The 30-year bond auction also occurs today, so quite a bit on the table for today. You also have this morning, JP Morgan and Wells Fargo released their earnings, so we start to get some insights into our financial market sector. And then tomorrow we have weekly jobless claims, producer price index, Empire State Manufacturing, Philly Fed manufacturing survey, and then a whole host of earnings plays coming out during the day tomorrow, either before or after the market. You're going to have Bank of America, Intel, Citigroup, Lennar, BlackRock, Charles Schwab, Fastenal, PPG, and Schlumberger, and then finally Taiwan Semiconductor for the earnings spotlight. So a pretty big slate of activity coming out tomorrow between the macroeconomic reports as well as earnings reports. In terms of volatility, several things of note here. You do have an increasing volatility in the 5-day versus 10-day. And we've been talking about how much daily range activity we've been having. And kind of a twist, while we had not a standard deviation move across any of the four indices yesterday, in terms of total range, we actually had both a higher high and a lower low yesterday, but when it was all said and done, relatively small body, so you had less than a standard deviation close to close move, and yet at the same time you actually had a very wide range of price range. So little distorted here from what really occurred. We continue to have significant price range volatility during the day across all the markets, but in particular the SPY and the NASDAQ seem to be even hotter than the Russell and the Dow. Let's see here. Short-term volatility in the S&P is a 19.63, so we continue to see an escalated VIX. Keep in mind also that with that action yesterday, we went into the day. It was important to break 2025 in the S&P E-mini futures contract. Well, we did that. We rocketed all the way up to 2050. Did that. Hit a wall. Hey, that's the first warning. Exhaustion, bearish divergence, volume. That's your warning. Will Robinson moment. Strong sell-off all the way down to 2001. Again, this is using the S&P E-mini futures contract. So super important today. Watch that level, 2001. And the overnight action, we are currently at 2001.75. So we are at critical action right now as I speak. And as all the market participants come into the market, it's going to be very, very important to watch. Does this 2001 area hold, especially when all of the market participants are in play? If we drop below that 2001, we could see significant weakness potentially set up for the day. In terms of our market timing models, we are still in phase 3, but we've got a lot of caveats to this. I mean, you could start drawing potentially diamond patterns. You could start drawing, lower highs and higher lows. I mean, this is a mess, and ultimately, we really have to call this a very, very neutral, complex correction kind of pattern at the least at this point. While our trader posture is in a confirmed uptrend, from a portfolio trader standpoint, the active trader is where we get a lot of messiness. Technically, the signal does call and give an all okay for new short-term and intermediate-term bullish trades. We went just above the center point, but as we've been talking in recent days, we've been flip-flopping back and forth, and we really need to be very cautious. At least consider reducing position size on any new positions, and then be very careful with the initiation of any new positions. From a position sizing opinion, you're getting anywhere from 50 to 100% on new positions as your opinion. So it's a little bit of a wide range here because of this messy market posture. Our one-day outlook is ultimately to be bullish. If we can hold, then we're a bit short-term oversold, but this may certainly show some early weakness before support is found. 3-day outlook is bullish, and you might be starting to look for opportunities to leg in on aggressive trades. 2-week outlook is bullish. As we talked about earlier, market forecast really quite borderline, technically bullish across all 4 indexes now, even the NASDAQ with a 39.1 rating, but it is curled up on the intermediate line, so that is bullish and would be giving you the okay to start looking at new trades. At the same time, we've been really flip-flopping back and forth, and we can't stress that enough. In terms of volatility, and our overall hedge warning status, we're still to 0+, but this could deteriorate today depending on what the action is. We could see this threshold level elevate from a 0+ to the next level, level 1, so we'll have to put some extended caution around this current hedge warning status. Option income strategies. After only 3 days of recent trading activity within the window of acceptable, it has popped outside that window in the last 2 trading days, so not conducive to option income strategies unless you're doing some sort of really a volatility play as opposed to a pure theta play. In other action, let's roll down here to the reports I want. Our market posture by sector, again, you see this continues to be absolutely a mess with our standbys in consumer staples, healthcare, and utilities holding up in a relative term best, but also notice they were all down yesterday, so they may be holding up better in terms of market posture, but you're still giving up price, and they're just holding up better than some of the others. You see energy down 2.8%, got hammered again, and really very difficult to be looking for a bottom in the energy sector at this time. Telecommunications was our sole positive yesterday as a sector group. Okay, I think that pretty much will do it for today. As always, if you like what we're doing and you'd like to continue to support and encourage us to do this, please like us. Send your comments in on our Facebook page. You can see all your favorite social media platforms there. We're StockTwits, we're Scootify, we're where you are with social media. You can also send us email questions at support@falconglobaltraders.com. More information available on our website, and included about our 3 live trading rooms and other daily price guide products to help day traders and short time swing traders. Disclaimers as always. If you'd like to read this slower, just hit the pause button. And as always, we greatly appreciate your time and contributions to our Falcon Global Trading community. Thank you and good trading.